Hi everyone. Yet again. Welcome back to our Nepali YouTube channel. In today's video we are going to talk about candlestick pattern and 6 major candlestick for entry or exit from the market. If you are new to this channel, subscribe. My friends, you probably know the green candles and red candle, but that doesn't seems enough to operate in the market. As you know, green refers as bullish, meanwhile red stands as bearish. But this video will bring you more closer look about. Besides candlesticks, there are few other elements you should know about the market. If you are beginner, don't rush to invest without knowing this candlestick and other elements which might help you to understand market properly. Okay, alright, let's begin. What is a candlestick? A candlestick is a way of displaying information about an asset's price movement. Candlestick charts are one of the most popular components of technical analysis, enabling traders to interpret price information quickly and from just a few price bars. This video focuses on a daily chart, wherein each candlestick details a single day's trading. It has 3 basic features: the body, which represents the open to close range; the wick, or shadow, that indicates the intraday high and low; the color, which reveals the direction of market movement. A green body indicates a price increase, while a red body shows a price decrease. Over time, individual candlesticks form patterns that traders can use to recognize major support and resistance levels. There are a great many candlestick patterns that indicate an opportunity within a market. Some provide insight into the balance between buying and selling pressures, while others identify continuation patterns or market indecision. Before you start trading, it's important to familiarize yourself with the basics of candlestick patterns and how they can inform your decisions. 6 bullish candlestick patterns. Bullish patterns may form after a market downtrend, and signal a reversal of price movement. They are an indicator for traders to consider opening a long position to profit from any upward trajectory. Hammer. The hammer candlestick pattern is formed of a short body with a long lower wick, and is found at the bottom of a downward trend. A hammer shows that although there were selling pressures during the day, ultimately a strong buying pressure drove the price back up. The color of the body can vary, but green hammers indicate a stronger bull market than red hammers. Inverse hammer. A similarly bullish pattern is the inverted hammer. The only difference being that the upper wick is long, while the lower wick is short. It indicates a buying pressure, followed by a selling pressure that was not strong enough to drive the market price down. The inverse hammer suggests that buyers will soon have control of the market. Bullish engulfing. The bullish engulfing pattern is formed of 2 candlesticks. The first candle is a short red body that is completely engulfed by a larger green candle. Though the second day opens lower than the first, the bullish market pushes the price up, culminating in an obvious win for buyers. Piercing line. The piercing line is also a 2-stick pattern, made up of a long red candle, followed by a long green candle. There is usually a significant gap down between the first candlestick's closing price and the green candlestick's opening. It indicates a strong buying pressure, as the price is pushed up to or above the mid-price of the previous day. Morning star. The morning star candlestick pattern is considered a sign of hope in a bleak market downtrend. It is a 3-stick pattern, one short-bodied candle between a long red and a long green. Traditionally, the star will have no overlap with the longer bodies, as the market gaps both on open and close. It signals that the selling pressure of the first day is subsiding, and a bull market is on the horizon. 3 white soldiers. The 3 white soldiers pattern occurs over 3 days. It consists of consecutive long green, or white, candles with small wicks, which open and close progressively higher than the previous day. It is a very strong bullish sign. signal that occurs after a downtrend, and shows a steady advance of buying pressure.